Hello, everybody. My name is Lucas. I'm the co-founder and CEO of Centrifuge. I have a very abbreviation-heavy talk title, I realized. Real-world assets in DeFi stealing traditional finance's lunch. I'm here to unpack this a little bit. Before I do that, though, I want to give you a bit of a personal backstory of why I'm here, why I talk about TradFi, real-world assets, and so on. So in my long tech career, I spent or sort of randomly got into fintech in 2014, working with sort of businesses all around the world, like some of very largest businesses, but also some of the smallest ones. And really the thing I learned there is just how backwards our financial system is, how you upload FTP files on a daily basis to get some payments triggered, how you then reconcile that in Excel, and you hope that nothing gets lost along the way. And so this is sort of stuck in my mind when a couple of years later, I started looking into Ethereum. But really, what also stuck in my mind at that point was sort of just how our financial system works. We have, on the one hand, the blue chips, the largest sort of players in this world, a Google that can go out into the bond market and sell $10 billion worth of paper at 0.5%. They're stuffing their war chest with basically free money, and the Fed will come and say, yeah, quantitative easing, right? We'll buy that. At the same time, looking at sort of your small business, the Joe the plumber, wanting to grow their business to buy new tools, sort of like needs liquidity, solid business, but just only looking for a couple of 100,000, well, like your Bank of America or whatever other options they have, they'll charge 15% APR, and you can't really actually explain why they're charging that much more just with credit risk. So what you see is there's like obviously huge inefficiencies in here, like problems with liquidity, problems with just sort of like if you don't fit into one of these pre-existing boxes, you're mostly shit out of luck of like how you access finance. And so there's a huge part of our financial system today that does not have access to the kind of cash that Google has access to. And I think sort of that is a motivation and sort of an initial thought behind a lot of what crypto was early on and sort of is DeFi today. It was for me in 2017 when I sort of started looking into Ethereum more in depth. There were ICOs, there's programmable money, so these ideas existed, but it was always about openness, about everybody being able to do something with this system, it being transparent and it being accessible to everybody. And for me, what I saw in this is actually like the financial software that I built in the past, like you could actually build it as real financial software, programming money and making code do these decisions, making code actually run this instead of people trying to deal with antiquated processes like spreadsheets and FTP uploads. But where are we today with Ethereum? Well, Ethereum has been growing up, and therefore also DeFi has been growing up. And I think we're sort of at a point where maybe the internet was in 1999. Like Amazon selling books, like people trying to understand what this e-commerce thing was going to be, but it really hasn't hit the banks, the finance world today, what it will actually mean, right? Like people won't just buy books, but people will have an online account with a company and they'll just do everything with it. And Ethereum and DeFi has been on a huge run, right? We're sort of seeing where this is going, but I think it's mostly the people in this room that are seeing this. Like we're really not quite sure. These banks out there, traditional world, they're not sure what's going to hit them, when it will hit them. But yeah, so that's why when I started looking into this, I thought back at this like experience of seeing how small businesses struggle to borrow, how like small asset classes that are really attractive are just too small to do an IPO or too small to do a bond issuance. Like they don't have 50 suits just working on making sure you have the cheapest cost of capital. And these businesses, like they can use DeFi today to unlock the liquidity that they need. So DeFi, how I look at it, and this is maybe a bit of an edgy statement, especially in the recent weeks. I think it's more than just jurisdictional arbitrage, right? I talked about all these technological benefits, the transparency, the openness, the disintermediation, which is it's something that in itself has a lot of values that is much more than just what you read on Twitter today when Gensler goes after tokens, or when you see people talk about like this wild west of tokens, right? There's the underlying foundation that we've built for these tokens that didn't have any place to trade. They are actually also useful for the traditional world, for regulated assets, for sort of like real assets that exist out there. And by the way, my timer is not working, so I will have to look at my watch. Yeah, so the real-world assets in DeFi, it is the literal trillion-dollar opportunity, and I think I'm not exaggerating here. We all know that, right? And sort of bringing these assets into this world is what I've been working on, what our team has been working on in the last couple of years. And so we are literally trying to open the floodgates for real-world assets to get into this ecosystem, right? Where you can sort of imagine real estate being used as collateral in Maker. We're actually already doing that today. For about the last 6 months now, starting in April, we've had Maker accept one of our collateral, fix and flip mortgages, as collateral. People have been, these asset originators have been borrowing money from Maker, minting DAI, and then giving it to real users who will buy a house, renovate it, and sell it, right? So like you have money from crypto going into the hands of the average Joe, the plumber Joe. So how are we doing this? Because real-world assets are very complicated, scary, like maybe in some ways way more abstract than like a simple ERC20 governance token, like Uni. What we do actually, we focus on a particular asset class. We're not trying to bring Apple stock or Tesla into DeFi, because like really, if you want to buy Apple, you should go to Robinhood, or if you're slightly more sophisticated, you have a brokerage account and you buy it on the market. There's a liquid market for that. DeFi is not right to compete. But where we are able to compete as an ecosystem is with those smaller asset classes, the ones that don't have the reach that Google has, the size that Google has, right? And so what Centrifuge does is we basically allow asset originators to create very simple on-chain credit funds that are essentially collateral-backed pools of loans that investors can buy tokens in and earn interest on an asset class such as real estate, trade finance, and so on. We then work very closely with other DeFi protocols to not just allow individuals, institutions to buy and hold these tokens, but also to then make those assets really truly DeFi native and sort of start using these other DeFi Legos, money Legos, like a Maker or an Aave. So what are our asset originators? We've launched about 18 months ago with Tin Lake, which is this securitization framework. We have now about 8 asset classes live. There's asset originators that bring real estate, revenue-based finance, like SaaS revenue. We have trade finance, so electronics being shipped from China to the US and being financed while they spend their month on a boat. Emerging market consumer loans, gig economy workers that need to finance their their Uber revenue, and so on. So these companies are sort of the fintechs of the world. They're like new startups, smaller borrowers, and by small I mean like 10 to a couple of $100 million, and they see the benefit of DeFi. They see it because they're tech companies themselves. They see it because they actually get screwed by those banks, the same way the average plumber gets very little access to finance, right? What we allow them is we allow them to connect to other DeFi protocols, get liquidity, and in turn, these DeFi protocols get volume, yield, stability. And I think stability is a really big one, right? Because stability today in DeFi, like if you look at correlation, Bitcoin goes 5% down, everything else will go down 5% as well. And that's, I think, the thing we need to get out of to really build a stable system. Sort of thinking about what's happening next, we want more assets, more DeFi protocols. And I'm maybe a little bit giving you a little bit of a teaser. We have both extremely exciting new asset originators, blue chip fintechs like unicorns, sort of looking at DeFi as a place to build out their capital sourcing strategy, but also doing things like launching an Aave market, which is gone through the community vote and is going live in due time and very, very soon. So this is where we are today, and this is where we are at this time, where we're selling books today, right? But in the future, we're going to be doing much, much more, and I'm very happy to share that journey with all of you. And really, the core message here for me is, like, DeFi has proven it can build codes. We can build code that will build that runs these financial products. We've proven this out with markets, extremely volatile, crazy assets. But actually, also, we've gotten to a point now where this is actually something that fintechs will use, right? And so when going from letters to fax to internet, I think DeFi can be the internet to what fintech is maybe fax today. And the things that are exciting here is like instant settlement. We have a huge liquidity premium, right? Like assets that are traded today for a fraction of the cost. We have automation and transparency. And so when thinking about what's going to happen in this space, those are the trends that I focus on. This is really the very brief overview of what Centrifuge does, sort of how we envision TradFi really being replaced by DeFi at some point. If you want to actually see all of this in action, go to tinlake.centrifuge.io and you'll see different asset originators creating these pools. You can play around with it. You can become an investor. You can go through the process. You can also check out in Maker, where we have now, I think, over 10 million DAI in real-world assets. And hopefully soon, head over to Aave, where as well you'll be able to sort of provide liquidity to these new exciting asset classes. Yeah, thank you. Are there any questions?
Lucas, thank you so much.
Yeah.
That was an excellent presentation. Really appreciate it. Maybe we'll have 1 or 2 minutes. Open the floor. If there's any questions for Lucas, we'd be happy to go through it. No questions. Gentleman over here. Excellent. Let me come over to you, sir, so we can all hear. Thank you.
Do you really think that DeFi can unlock a lot more value for these guys versus fintech and traditional finance? What's your pitch for all these asset originators to use DeFi? Because it seems complicated for them, but what's your main pitch in terms of?
So the main thing is actually surprisingly, if you talk to, and I talk to a lot of these asset originators, a lot of times rates are almost secondary. A thing they really struggle with is having a diversity in sources of funding. It takes a very long time to get your line of credit with a major bank. And if you have a line of credit with this one major bank, this other major bank is not going to they're not going to share information. They're not going to like say, oh, just because you have a line of credit here, you can get another one, right? So you're really just like always locked in to where you get your money today. And so this liquidity premium that you get once you're in DeFi, once you sort of have a token with liquidity that can be used in collateral both in Aave and Maker, is extremely attractive to them, right? Because you get this same liquidity that you can, within a block, move your money from Aave to Maker just because the rate suddenly got more interesting here versus there. That is really a big part.
Understood. Thank you.
Maybe one more back there.
Anybody else, or should we let this fine man go?
You.
Yes, sir. All right. Thank you. Thanks very much.
Do you have any? How do you assess the risk? Do you have any manual intervention, and how do you think about the decentralization in that process?
Yeah. So oracles for real-world assets are extremely hard, and so there's sort of one thing we do when we create these pools is we require the asset originators to put up some of their own money in the equity piece. So these pools are actually structured. It's a bit too in depth to go in now, but what it means for those that do understand the term, asset originators can sort of take a leveraged exposure, so they provide the first loss capital in these pools, meaning like only if losses go over this insurance threshold do other investors get hit. So we have this like junior-senior structure. In the long run, actually, this is on our roadmap. We've been talking about this publicly a little bit, and we'll be doing more. The idea is actually to take these junior investors and create a decentralized underwriting body that will then be able to essentially bet on loan performances and sort of underwrite by putting up their own stake, sort of staking to loans and indicating what the credit risk is that they think it should have.
Awesome. Lucas, you know I'm a big fan of you boys at Centrifuge, and let's get another big round of applause, and thank you for that presentation.
Thank you.
Great job, mate.